every investor has needs that are going to be slightly different. Smart beta ETFs are essentially applying a set of rules to an index to achieve a set investment outcome. So one excellent example of that is our low volatility strategy. In Canada, our TSX, our stock market, the S&P TSX cap composite, is about 65% in financials, energy, and resources. And for a lot of investors, that ends up being more volatile and more cyclical than they can take. So with the low volatility strategy, we actually look for the least volatile stocks within that index. So you end up with a portfolio that's not only less volatile, but it's also more diversified than the index. So within a smart beta ETF, an index is typically filtered based on a factor. So for example, low volatility is a factor, dividends are another particular factor, or another type of smart beta ETF that we offer is the MSCI quality strategy, where we factor based on the quality of the stocks within the portfolio. So within the MSCI high quality strategy, what we're looking at is companies who have grown their earnings, who have consistent earnings, so stable from one period to the next, and also we're looking for companies who have very little debt on their balance sheet, so their debt to equity ratio is low. And with that filtering methodology that MSCI uses to identify the highest quality stocks within the index, you're getting exposure to a basket of companies with a sustainable competitive advantage. So within our covered call strategies, we offer a basket of dividend paying stocks. And what we do is that we sell call options on half of the portfolio. And when we sell a call option, we receive income. And we do that on a monthly basis. So you could either replicate the broad index, so the universe of bonds in Canada. Within one ETF, you can buy corporate bonds, federal bonds, and provincial bonds, so it's an all-in-one. So within our fixed income ETF offering, you can pinpoint a specific area of the bond market based on your risk tolerance and your portfolio objectives. So you can invest either in corporate bonds, in federal bonds, in provincial bonds, and you can decide whether you want to go short-term in terms of the duration, mid-term, or longer-term based on your portfolio needs and views in terms of interest rate outlook, for example. You can access the Canadian bond market, the American bond market, and we also offer emerging market bond exposure.